morning. Well, a little cautious are we today, Andrew? But we'll turn you around by the end of the show. In the realm of ownership in India, there have been notable shifts in the landscape. Domestic ownership has surged and now reaching fresh highs in the third quarter of FY23. Conversely, FPI ownership has dipped to its lowest point in 10 years. Nimesh is here. Nimesh, tell us the data.
Prashant, it's a very interesting data, right? And it also shows that there is now stamp of authority of the domestic investors in the Indian market. So let me just go to the wall and explain why I'm saying this. If you look at the data of the change in ownership in India in the third quarter of this year, the domestic ownership has now hit an all-time high of 20%, and that has risen almost 100 basis points in the third quarter. The domestic is up 92 basis points, but the FPI ownership is now at a 10-year low, and that was down nearly 21 basis points in quarter three. The domestic household, which is the real direct investors, they have also increased their holding in the Indian markets, and that has risen by 20 basis points. Whereas the promoter stake, the promoter holding has gone down and at a record low, which was down 16 basis points, but was at a record low as well. So that's a big change we've seen in the ownership. Look at this. FPI is minus 21, promoters minus 16. The domestic mutual funds, Indian public is where now they have big stamp of authority on the Indian markets. Now look at what are the FPIs and the DIs have done in the quarter three of this year. In terms of major changes, I was just looking at the Morgan Stanley data. This is all Morgan Stanley data. From the 20 institutional holdings, the active positions in the month of September, they've risen the most in ICICI Bank and they've fell the most in HDFC Bank. That's among the top 20 institutional holding stocks. Now, what are the FPIs done? The FPIs have been underweight on the consumer discretionary, industrials, as well as the technology names. And if you look at the DI data, the domestic investors, they've actually reduced their underweight on financials. So now they're warming up in buying into financial stocks. However, they've increased their underweight on technology, consumer discretionary, and industrial. So it basically matches with the data of both FPIs and DIs. Now look at what the FPIs have done in the last 1 year. This was a quarterly data, but if you look at even in the last 1 year, what the FPIs have done, surprisingly, in the last 1 year, HDFC Bank has been added by the larger FIs. So is the case. Yes Bank is a surprise name there. Dr. Reddy's they've added, Axis Bank they've added, and ABB is the fifth name that they've added in the last 1 year. That is the FPI data. Now, what have they sold in the last 1 year, or where they've reduced stake? In terms of FIs which have reduced stake in the stocks, United Phosphorus stands out, Indus Tower stands out. GAIL is one stock in the PSU where they've sold a bit of stake. IndusInd Bank where they've reduced stake in the last 1 year, and the last name is Infosys in the IT name. So the aggregate data suggests that the domestic investors have put a full authority now on the Indian markets, and their stake is now at 20% at a record high.
Okay, all right. Nimesh, thanks a lot for that. Andrew, you want to comment on that, the kind of ownership change that we've seen in the Indian markets, and how are you